So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again, and welcome back to The Daily Call. Today we're going to be talking about why being lazy, ironically, is a great trading strategy. So, although we want to be active in entering new positions, once we get into new positions and we have a balanced portfolio, we've taken care of the position sizing issue that plagues a lot of investors. The reality is that being a lazy trader from that point on is actually not that bad of a strategy. Basically, don't touch it, don't mess with it, stop fidgeting with your trades and trying to overcorrect them along the way. Let the numbers, the probabilities, the system work its magic, basically. Let the probabilities work themselves out over time. And I find this a lot with new traders because we get into new positions and immediately a stock starts to move, right? Because that's Murphy's Law. What's going to go bad ends up going bad, right? And so as soon as the stock starts going against us, just even by a small margin, you have one losing side or, one position starts losing, and immediately the thought is, well, I have to adjust. I have to tweak this. I have to correct this. But you just have to let it go. You have to be diligent and mechanical enough to say, you know what, I've got this profit target. I've controlled what I can control, like what we talked about just in the last episode yesterday. And from here on out, I just have to be patient and kind of let the system work, because patience actually pays a lot. That's where our implied volatility edge comes from. It comes from the patience in seeing volatility mature into pricing that is favorable for option sellers. So being lazy is not a bad thing when it comes to managing positions. Let them go, control what you can control, let the position go mostly towards expiration. And then at expiration or the last couple of weeks of expiration, if you need to adjust and start hedging or managing the position, okay, do it at that point. But for the most part, just don't touch it. Don't mess with it. Let the numbers do what they're supposed to do. One of the things that we found in our backtesting research for the profit matrix, which you can look up on our website, is we found that many strategies that really had no discernible management of any kind when it came to losses, whether that was stop losses, no rolling, obviously, actually performed the best when you just let the trade go, took profits when you're supposed to take profits, which can be an automatic thing. You can set that up and then be totally lazy and let the automatic closing orders do what they need to do. But as far as managing trades that go against you, we had many, many strategies that when you actually let the trade go, no stop loss, if it was not profitable, it went to expiration as a loss and was closed out, that actually outperformed many strategies that had stop losses or really aggressive adjustment strategies. Because sometimes when you mess with something way too much, you actually reduce the value that initial strategy created, because you're just tweaking it and messing with it so much. You just basically beat it up with analysis, paralysis, and tweaks. It kind of cripples the foundation of what it was meant to do. I think this will be an interesting case study generally when we start doing more of the auto trading and doing more of that publicly. Because for me, I've said a couple times now, what I'm going to be doing is setting up a lot of automated bots that trade very simple strategies and then letting them run and being pretty much hands off with them. There's going to be not too much adjustment. They're not going to be overly complicated bots that we're setting up. And I think it's going to be interesting to see how that plays out over the next couple, months and years, because I think what people will look back on is they'll look back on some of these and say, that really wasn't too complicated. Why did it do so well? And it's because it wasn't complicated and I didn't mess with it too much. So I'm really interested in, kind of building out some more of those and obviously sharing what we're doing here with you guys. So if you think it's been helpful, let us know. Leave us a rating and review on iTunes. Always, if you have any questions about trading or want to get your topic answered here on the Daily Call, please leave us a message at optionalpha.com/ask. And until next time, happy trading. Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from optionalpha.com.